So there are clues that you can use to determine whether or not a market has reached its peak, whether or not the market itself is not going to be trending anymore, the trend has stopped, and there are signs of a reversal. Now these are weekly charts, so we've got a couple of interesting signals here. Both of these represent indecision by the market to continue higher, and so we were looking at that point for a bit of a pullback. And that's exactly what happened. So once we do identify something on a weekly chart like this, here we have another very similar pattern, also a spinning top. This happens to be a black spinning top. This is a white spinning top. But the idea is basically the same. Indecision by the market caused the market to pause that week and just kind of stay in a very tight trading range between the close and the open and the close for that week, as well as forming two almost perfectly formed tail and a top on the spinning top. And what you'd like to see ideally is that the top tail be very similar in length to the bottom tail. So this wasn't perfectly formed, but it kept us alert to the opportunity that it might present to us in the fact that the market was in indecision mode after rebounding from this decline here. So it rebounded, it came into this little indecision area, and we were looking for the market to decline, and it did very significantly from approximately the 50 level all the way down to the 40 level. So that was a fairly large move over a period of a couple of months in which the Qs declined significantly. So when you see these kinds of opportunities, what you want to do is take the weekly chart down to a daily chart. When you take a look at the daily chart, you want to go back to this, the exact same period in 2007. Look what's happening on a daily basis. So on October 29th, which was the last trading day of the month in 2007, we had this little action here on a weekly basis. Basically, the market started up higher, and then on the last trading day of that week, it ended lower, basically forming the spinning top that we saw on the weekly chart. At that point, it would have been a fairly good and highly predictive call on our part to short the market, to buy a put on the Qs for the decline that we saw coming. Our stop loss would be just above that high. So once we got into a position, we'd be looking at stop loss of our in selling our put for a loss at just above this high here, because if we exceeded this high, the chances are that the market would continue to go higher, losing us additional money. We didn't want to do that. We wanted to keep our stop very, very tight, so we kept it at this high. The market, of course, went sideways for a couple of days, even started to go back up again, and we were thinking that maybe our position would not last and we'd be stopped out of our position. Instead, the market dropped off significantly that next week, and that's when we were able to cash in and make a good profit. Let's go back to the weekly chart for a second. On the weekly chart, you generally get a lot better signals. The longer the time frame, the better your signals will be. The monthly chart sometimes will work out very well, and sometimes they won't. In this case, the monthly chart showed significant strength. Volume was a little bit weak, but like I said, the very next monthly bar showed a good deal of volume on a declining bar. That gave us the clue that there was something going on. However, we made our decision to enter our short position based on the weekly chart. The weekly chart with these turning the spinning tops that we saw in the market gave us an idea that in fact the buying pressure was starting to to weaken significantly, and the market may hit at least a sideways to a declining pattern. And we were correct in that assumption. Now, a couple of different patterns here. We identified the spinning top and the spinning top here, and it gave us a clue that in fact the market would probably be in a position to reverse. What else did we look at? Well, we looked at volume. For example, here on this particular spinning top, the volume was extremely low, showing a lack of conviction. Not only was there indecision because the market couldn't decide to go up or down, so it stayed basically the same, but there was very little volume, so there was also very little conviction about which way to go. Part of the reason for the low volume, however, was that it was during the holiday season. So you have to take that into consideration when doing your analysis. In this particular case, the volume was also a little bit low, and that's normally the sign that, in fact, the indecision in the market was playing as well in this formation of this candlestick. Normally, when the market is rising and you get a spinning top like this on low volume, it shows a great deal of indecision. Buyers are not willing to step in to push the market higher. Sellers are not willing to step in at this moment either. But what it does do is after the market has advanced for a while, it does give an opportunity for sellers to come in because they see the lack of conviction on behalf of the buyers. And certainly anyone who purchased the Qs during this advance are looking to hang on to their profits as much as possible. And when they see this type of a candlestick bar on low volume, they will also be interested in selling their shares in order to lock in their profits.